Hello, everyone, and welcome back to Genius Wednesdays. Today is Wednesday, February 19th. You are joining Team Genius here for our weekly market analysis call. Today, we'll be going through our new format of a section on the crypto market as a whole, the global markets and the global financial engine, regional drivers and the story of the week, correlations of note, charts, and the summary of the CoinGenius market calls. With that, I will turn it over to our head of research, Mr. Steve Kwan.
All right, Christina and everyone, good morning, good afternoon. Can everyone see this? Yes?
Yep, you're good to go.
Okay. So, nothing. I guess my theme this week is really different traders and fund managers and capital allocators have different time horizons. And I know that, I just heard Nick Kearney mention that, Sprint was up 80% a day. So I'm not too familiar with Sprint, except that I've had their cell phone service for 19 years, and I guess I'm one of their longest customers. But I don't know what they did the week before, the month before, the year before. So my theme is that a 1 minute black box algorithm that starts looking at 1 year charts of anything Bitcoin, gold, S&P, they're going to drive themselves crazy, possibly insane. And just like the 1 year trader who starts saying, gosh, I should have waited 10 seconds. Well, if that's not your strategy and one starts to just deviate on the fly from a strategy, that's how I've seen many a fund manager and trader and investor go from a lot to nothing in very short order. So I guess I'll start with Bitcoin and US dollars. And I guess for a longer term person, it's been pretty uneventful. For a shorter term person, it was probably slightly exciting the day after Valentine's Day because it probably broke some hearts. Sorry, that was a bad joke. Okay, so here is, I guess, one of the issues that I see and continue to mention is the Bitcoin dominance factor. I didn't present an actual chart from CMC because it really just depends on what you're in. What are you interested in? As far as I know, there's not an indice of all 5,000 crypto projects on CoinMarketCap equally weighted. So just to say dominance is kind of a blasé term to me, but I'll show you some of the larger ones. I guess I tend to look at Litecoin, Ethereum, and Bitcoin Cash, since those were the first, I guess, other tangible items or Coinbase coins before it kind of, went more mainstream. So here, once again, it doesn't look like much, but Litecoin has dropped 8% in Bitcoin terms, where Bitcoin has dropped about 1%. So it's these little indicators and little moves that start to add up, and all of a sudden, wow, someone looks at Litecoin, they see, wow, it's down $5 over a month, and Bitcoin's up 300, and hence how you move from a Bitcoin dominance of 33% to 65%. Here is Litecoin, Ethereum. I guess, as I said a few weeks ago, it became noticeable that a large bullion dealer started to accept that. So Ethereum, to me now, I know it's totally different, but it's as good as gold. It's as good as cash. So those two kind of, Bitcoin and Ethereum, that is, kind of have a different metric to me. And you can see that that's actually up on the week in Bitcoin terms. So in US dollars, it's slightly up this week. So let's look at something else. Bitcoin Cash down significantly in Bitcoin terms, almost 20%. It was one of the top gainers over the past few months where we noted it when it was 0.02. So I guess, like I said, it's all your time horizon, where a 1 week trader probably is unhappy, but a 1 year trader is still up quite a bit. Moving on, Dash, another of the top gainers on the early run to all things not named BTC, suffered some losses. So you'll see that in US dollar terms down significantly. And that includes the, I guess, crypto analysis. And Christina, if you have any questions on anything, I guess now is a good time to ask. And like I said, the theme is just showing the, I guess, Bitcoin dominance or lack thereof. Or anyone? Any questions, comments, concerns?
Yeah, I mean, I think the basic question on everybody's mind is, just looking at these charts, a lot of weeks things become very interesting. A lot of volatility, draw a lot of correlations. Maybe there's some interdependencies between different markets. When things look like they are now, I mean, where do you anticipate things will go from here? Obviously, we're getting closer to the halving and all those things. So, I mean, how do you see this playing out over the next couple weeks, months, etc.?
Well, that would lead me into the next section of what are other markets doing. As I mentioned before, crypto blockchain was something where I helped out a project in 17 and it went better than anyone would have ever expected, where the majority of our asset management is outside of crypto. I mean, I spend quite a bit of time on it because it's very intriguing to me, but I guess the larger correlations and larger asset classes are still what I draw conclusions from. So I'll move on and kind of show you a couple of these. Eurodollars, i.e. LIBOR, not very interesting, essentially unchanged. Now we'll move on to the S&P, right at the tip top of all-time highs. But note this large drop on the 17th. Okay, keep that one in mind. And you'll notice that it was actually, I'm sorry, wrong chart. It was this last push down where Bitcoin made a low after being down about 8% that the stock market kind of took notice. And I heard Nick and others mentioning, could this market being Bitcoin and other blockchain projects, starting to affect the more, I guess, mature markets? I would say yes, and you'll continue to see this. So here's S&P. Notice the gap down. This was the low in Bitcoin, and there was a slight time delay. So highest volatility hit its low first. Lowest volatility was a little bit behind it. Now, gold is an interesting story. It's something that I've been involved in for almost 20 years in the mature markets. And it's just kind of been a grind higher. And, right before the recording started, it doesn't seem that interesting. I mean, it's all of up 2.5% this week. I mean, many of us know that Bitcoin can move 2.5%, or Litecoin or any crypto project can move that much in a matter of minutes. And I've seen it happen in gold, although it's much more infrequent. I think a good measure that people, I think Coin Genius especially, could start to show is just showing the implied, or I guess option-based volatilities of one asset class, where it's really hard to compare something with 100 volatility to something with a 15% volatility. Hold on one second. So back to what I was saying. Looking at something with a price of $10,000 and that has an implied volatility of about 37%, versus looking at something with an implied volatility of 14%, which is 1600. One would have to weight those either on a nominal basis in dollars or nominal basis in volatility. But let's move on to some of the other markets I follow. And this is the, well, this is a longer term chart of the yuan. So I just really wanted to focus on these few for the week to show what people may see as correlations or not. You can see that it was Bitcoin making a low that actually caused a bid in gold. So much as some may think that the two are highly correlated, they may or may not be, depending on one's time horizon. And I would open this up for questions, as these were these were two of the news stories that I saw this week. S&P and Nasdaq at new highs on additional China stimulus. Precious metals rally to 6-week highs on China stimulus. So that's the story that many, I guess, funds and large institutions will pay attention to until it's not the story. I know it sounds goofy to say that, but that's kind of how it is. The story may change. A couple weeks ago, there was nervousness about coronavirus. Then all of a sudden, there was no talk of it, and everything was blasé. And now China needs to add some QE, printing money, stimulus, whatever one chooses to call it, to the system, so that money ends up going to banks and funds at essentially a extremely low interest rate, and they put it to work somewhere, and it would appear that they put it to work in equities, gold, Bitcoin, so pretty much a large gamut of things. So that would be part two of my presentation. If there's any questions, concerns, comments, and the final part will be kind of a longer term correlation page, so one can really see what I'm talking about. Jeremy, Christina, or anyone?
Yeah, no, I'm on the same page. It's really interesting to see what's happening. There's a lot of interesting things with the global markets. I mean, if you look at a world map, Market Insider has a good map and just showing all the different markets, what they've done over the last 30 days as an example. And I mean, if you look, the global markets are in the green. There's only like 3 or 4 countries that are in the red, and they're really not in the red by that much. So as it relates to all the news and all the things happening abroad, like we had mentioned last time, and I think Samson agreed with me, which is I think we're going to see a delayed effect or impact on the global markets as it relates to things like the coronavirus and what's happening with stopping, or limiting the manufacturing supply of things like Apple and these large stocks. They just announced that obviously they're going to miss their earnings and projections that they had. So, I mean, that will have a trickle down effect. It's just a matter of when. So I'm not sure what's continuing to inflate the market, given all of those circumstances that people are aware of, but it's just a matter of time before all that kind of, comes crashing down. To what extent, I'm not sure, but it's going to be interesting to see how that impacts crypto. So, I mean, as it relates to that, and I know that's in Christina's kind of macro discussion, so I'll stop there. But, yeah, I agree with a lot of the things you're saying. Is really interesting to watch at this moment.
Well, I'll add one comment to myself. I know that's silly, but people want to focus on China and coronavirus and this and that. And like you said, Jeremy, some equities are saying that because of that, that being the unease in parts of China, that they may miss earnings. But I look at that sometimes more as that's there's an excuse now to miss earnings. So because of this, I can say that. And a lesser story that I didn't put in here because it doesn't really fit the bill is that the Federal Reserve of the United States of America also is doing permanent and temporary open market operations, i.e., pushing freshly printed US dollars into the system to help, I guess, keep the dream alive, for lack of a better term. I'm always one to say trying to short things and pick tops and things going up usually gets people broke very quickly. But it's not, when you hear about national debts in the 25 trillions and one looks at, say, the Bank of Japan's national debt, which is in the quadrillions. That's 1 quadrillion is not a made up number like my son says a zillion, but it's actually a thousand trillion. So if you have 1,000 trillions, that's a quadrillion. Now, the last part is really just showing, I guess, a longer term of 1 year charts, and I'll start with, my mouse is stuck, but the driver last year, this was high interest rates. This was the realization that funds, especially, had really overextended themselves. So they kind of got, how can I say, they got a little bit whipsawed there. So this was Bitcoin 1 year. Here's gold 1 year. Notice that it was kind of blasé, and then all of a sudden it caught a bid. It's a lower volatility again than Bitcoin, so notice the time delay. This was euro dollars, which generally are the lowest volatility, but they were the first to move up, hence rates were going lower. And as I've said, interest rates and currencies, generally speaking, are going to trump any market. Now, let's look. S&P was, I guess, a laggard, but since then, this is the S&P over 1 year. And here's euro dollars over 1 year. Not very exciting since last summer. Now, here's something that's worth noting. This is the yuan. How many yuan does it take to buy a dollar? Well, now it's 6.99, and they go out many further decimals in the futures world. So although this might look like the same 6.997, it's not. And again, this was euro dollars, flat, increase, increase. And you can see that the highs were summer last year, not stopping ever, maybe. Highs, gold. I think I'm kind of making my point, hopefully. Lastly, here's Bitcoin. As you can see, here's a 2-year chart. High last summer. 2-year chart in gold. Gold's extending. S&P 2 years. Euro dollar 2 years. And, oh wait, here's one I haven't showed before. This is the yuan. How many yuan does it take to buy a dollar? Well, this is one that I think, especially with the nervousness coming out of China, is warranted. Like I said, although 6.9972 is very close to 7, in my experience, funds and many traders tend to look at open or even numbers. Now, the Dow down 1,000, the Dow up 100, the NASDAQ up 100, Bitcoin down 100, whatever the case is. Round numbers catch people's attention. So over 7, there starts to be some, how can I say it? Some situations may arise. Lastly, my thoughts are in the crypto space. I continue to move Bitcoin to Ethereum, Litecoin, Doge, and Dash. That's on dips. I'm almost fully allocated. So those are, I guess, not really new predictions, but I'm a believer that for this to be an industry, there needs to be movement from Bitcoin to other things. And I'm not anti-Bitcoin. I think it's a great thing, but it's kind of like if all there was gold and there was no silver, no palladium, no platinum, no copper, and all there was gold and gold miners, it's kind of a one-trick pony versus being able to talk about palladium, platinum, or platinum gold, or silver gold, and so on and so forth. And that is the conclusion of what I have to share.
Thanks, Steve. I think it's really interesting that you talk about, getting into other coins. One of the notes that I saw, or one of the news articles that I saw this week, was someone donated $500,000 in ADA in Cardano to, I believe, the University of Wyoming. And just to kind of see that happen as a transaction was really interesting to me, and just kind of seeing other coins start coming into the news cycles was really interesting. One thing before we move over to other topics, on the subject of correlation, Steve, you and I talked about this over the weekend about, the opens and closes and the traditional Wall Street versus the 24/7 fabric of trading. I mentioned to you that, I was seeing a correlation that during the week, the price of Bitcoin was higher than it would be on a Saturday or a Sunday. And I made the correlation, to me, it seems like if you are long on Bitcoin, you're buying in every week. To buy in on a Sunday, you're getting more for your dollar than you would if you're buying in on Monday morning. So I'll be looking into that for the metrics, but I thought that was interesting to pass along too. And Steve, happy to hear your thoughts about just kind of the trading ecosystem in general and why that might be when you overlay that against the 24/7 of the cryptocurrency markets.
I do remember that conversation, and I would say that this week or the past few weeks, the trend in Bitcoin was up and the trend in Ethereum was up, i.e. green, gains, positive. So Globex, which is the CME electronic markets, is open from it closes only for 45 minutes, but as many know, the bond market opens at 8:20 Eastern time. The U.S. equity markets close at 4:15 Eastern time. And I think going back to a week or two ago, Jeremy and others have mentioned, I agree, that the U.S. by far has the deepest capital markets, whether it's Bitcoin, gold, S&P, Apple, crude, copper. You can get a market in anything at any time. It's just how wide of a market and how much depth do you want? I would agree with what Christina says, that generally between 7 a.m. and 5 p.m. US time, one can get a very, very, very deep Bitcoin market. I mean, I know multiple people where we could call them right now and you'll get 100 Bitcoin up for $15. That's their spread market. That's $10 million $1 million, sorry. So $1 million market, $15 wide, that's a $1,500 spread on $1 million. Sounds like not a lot, but hey, you make enough of those spreads each day, you end up doing very well. So with the trend being up, many of these liquidity providers widen out, or I guess have much less depth and liquidity on the weekends. Hence, if the trend was up and someone wanted to get people, quote unquote, out of their positions, the weekend would be an opportune time. So trend up, get people out over the weekend, then they get to buy what the, I guess, smaller retail investor, generally speaking, is doing on the weekend. That's great. Then move it back up on the weekends. I mean, or the weekday. It's common in precious metals where you will see a counter trend move about 15 minutes after the Globex open on Sundays. And you could look back if it's of interest to you, and You'll see it many, 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 many times, especially in silver, platinum, palladium, where gold is the deeper market. I would say gold is to Bitcoin as Litecoin is to silver. But yes, there's less depth, and you would not get 100 up, $15 wide Bitcoin market from the people that I would deal with on Saturday afternoon like you would right now on a Wednesday at 2:30.
Gotcha. So, Steve, can I pivot this and kind of piggyback on this? The industry for Bitcoin futures is expanding. We're seeing it with Binance, we're seeing it with the CME Group, BitMEX, Bitfinex, and Bakkt. When we have a digital asset group that is already thinly traded, and then we look at these futures that are happening, can you talk a little bit in crypto 101 terms about just things to keep in mind in futures trading and how that relates back to the entire crypto market?
Sure, this is something I've talked about with pretty much every asset class I've ever dealt with. I don't know if any of you have ever traded RBOB or gasoline futures, but there are 42,000 gallons per future. So if I said I'm trading 42,000 gallons of gasoline to many today, you're like, wow, that's quite a bit. But if my friend saw, oh, you're only trading a one lot now, Steve, that's garbage. It's the same thing, but it's all perception. And I guess I would ask, how many of you have actually ever held a Bitcoin? Not had one in your account, but held it. Probably none, because it's digital. I can't actually see it. And how many people have had 100 ounces of gold in their pocket, or 5,000 ounces of silver, or 25,000 pounds of copper, or 118,000 pounds of cotton, 42,000 pounds of sugar? Like, these are what futures are. People want, in the original days, people used them to hedge. Like, instead of a farmer having to drive his whole crop from Iowa to Chicago to sell it, they created futures, and they started as hedging mechanisms where, I guess, speculators or people with deeper pockets were willing to make a market. I'll buy your corn for $3.15 a bushel, or I'll sell you some at $3.25, although I don't have it, but I'll obtain it by that futures day. What ends up happening in futures is each month in crude oil, I guess, every other month in gold. Bitcoin is a monthly, where people want the exposure. I mean, I guess the digital asset space is the easiest one to really correlate that to, where I've never held a Litecoin, I've never held a Dogecoin, I've never held a Bitcoin. It's something digital where I and many want the exposure, or they want the capital gains or capital losses, or not losses, but they want the exposure both ways. What futures allow people to do is, as long as you're willing to put up margin, you can get the exposure to being short or long something. I mean, essentially, flipping a coin once, it's going to be heads or tails. We could flip it 100 times. The first 99 may be heads, but the 100th time, people like, it has to be tails. No, it doesn't. It one outcome has nothing to do with the other. So really, with futures, it's just about being able to get people exposure. And I guess to the, how can I say this? To the it's kind of anti-Bitcoin, it's anti-gold, it's anti things that are supposed to be finite or have some finite properties. I was talking with someone, and we don't really know how much gold is left in the world. People can guesstimate, but he posed the question. He goes, Steve, what if a meteor hits the US today and it's made of 50,000 tons of gold? What do you think happens to the gold price? I go, down. He goes, can a meteor of Bitcoins hit and increase I go, well, only God can judge that, but I'm going to say no. So ultimately, the Bitcoins and Litecoins and things that are finite are the things in the digital asset space that I would put in kind of a certain realm, Bitcoin Cash, even. Then there's the things that I'll compliment Nick Kearney again, where there become uses. Like Ethereum is used in many different things. But again, I'll say that futures, there's a lot more than 18 million Bitcoins worth of Bitcoin that are traded and exposed each day. And people would say, well, what if all the futures get delivered and there's not enough Bitcoin? It won't happen. It's not happened in gold. It's not happened in silver. The exchanges have certain mechanisms to prevent that. They essentially did this to Palladium in 2000, where you go to a close only system. So anyone that's long either sells or they hold, and that's how they would prevent a quote unquote run on Bitcoin futures. I don't know if that explains what you're looking for, Christina, but I guess essentially people just want exposure, and this gives a way of exposure to many that may not want to go to Coinbase and give their account here and blah, 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 where all you need to do is open a futures account and put $20,000, $10,000 in. You can have exposure to multiple Bitcoins by the end of the day.
I find that super interesting. I know that from my family and kind of like the 101 culture, there's already concern around manipulation in the markets as they are. So the concern with the thinly traded asset and then having futures on that thinly traded asset is, what would stop someone from manipulating and pushing prices down. So I find the mechanics of it all very interesting. Jeremy, I'd like to kind of pick on you really quick. Would you like to give your thoughts around futures or any of the other topics from the analysis this week in slightly more digestible manner, since Steve's still super, super high up there?
Yeah, sure. As it relates to futures, I think that's really interesting. Just got off a call the other day with the Binance futures team. It's really incredible to see what they're doing there, really opening this up to the global markets. Unfortunately, if you're in the US, you can't take advantage. That's a bummer. I'm sure people can find their way around that. But as it relates to, what's happening in the market, I think that's something that's really important, is for people to understand and get a pulse on, what people are anticipating the future holds for Bitcoin and other digital assets as well. I know Ethereum, futures is coming online as well. So, I think, in the top 2 out of the top 10 in terms of digital assets, being able to track where people anticipate that going is going to be very telling. Now, to your point, a thinly traded asset, is very different in a futures and options market than it is in traditional capital markets, meaning that, people can use that to their advantage, potentially manipulate prices. There's one main difference that, especially anybody who's a new listener on one of these Genius Wednesdays that needs to really understand, is whether you're looking at this from a monetary policy perspective as it relates to Bitcoin and digital currencies, or you're looking at it from a store of value, which that's basically what it is. You need to understand that, I think they had mentioned it before on the call, which is there's a hard cap, and this is the main differentiator. Whether it's in gold, there's no hard cap. We don't know how much gold's in the ground. Bitcoin, in terms of how it was coded from the very beginning, there's a cap. It can never go over 21 million, right? So it could have been 50 million. It could have been 75 million. It doesn't really matter what that number is. It's pretty arbitrary, but it's just the fact that there is a actual number and a cap that it can never go over, right? So there'll never be more than 21 million Bitcoin in existence. And you can imagine how it's actually developed and coded from the very beginning is it was coded to take advantage of the network effect. So the more people that use it, the higher the value will go. It's basic supply and demand, right? So for me, looking at all the kind of global macro implications in the futures markets are great, but literally how this thing was developed and created from its inception was to only grow in value as it's consumed. You think of people like Visa, coming on with Coinbase. They made an announcement, I think today or yesterday, is that Coinbase is the first crypto Visa Premier customer. The problem is that most people just don't understand that nobody wants to spend their crypto yet. Crypto is a hedge, right? It's a speculative hedge, and eventually it'll be just a hedge. But no one wants to spend it. And this is why it's really confusing a lot of people in the traditional financial markets, because they're used to having specific monetary policies where it enables people to want to spend their fiat, their US dollars, their yen, whatever it is, by, through measures of quantitative easing and things like that. But with Bitcoin, you're almost incentivized to hold it over the long term. So that's very different. So people just don't even know how to approach this. So this, these things with Visa and, the onboarding, that's great because then people can use their cards to onboard, and that's great. But people are not going to necessarily use this and hold a card to transact crypto yet. We haven't hit that critical mass yet. So for me, that's how I look at it. All this other stuff is just noise. I think it's just really what I'm tracking is looking at when is Bitcoin and cryptocurrency going to move from a speculative hedge to an actual hedge. And when that thing happens, I think that's going to be where, this entire industry really takes off. And I think that's going to be a result of a significant global economic downturn when people are not going to have any other choice.
Hey, Jeremy or Christina or everyone, can I make a comment? It's kind of off on a little bit of a tangent, but I guess over the past couple of years of helping out various projects, there's 2 years ago, a project took me to WCC, and this past year, CoinGenius took me to WCC, and there seems to be a new catchphrase, I guess, each year. The first year is, what's your white paper? What's your roadmap? And I talked to legal entities at large US, I guess, arenas, and those are not legal things. So I can, whatever my goal is, it's kind of writing a business plan. But the one that I really have heard of the past couple of years that is the biggest misnomer and almost the death of any project is when people try to push, a la what Jeremy was saying, here, let's put your Bitcoin or Ditcoin or ABC coin on a credit card and then you can spend it. Well, essentially, I'll give a comment on the ADA thing. I think the ADA market can handle $500,000. It's not something, I'm sure it would move the market, but ADA is a mature enough project that 500,000, it might drop a few dollars if somebody hit the market just and swept the book, which means just take out every bid, but it would recover in fairly short order. It's a $1 billion+ project. But the smaller projects that think, oh, we need to have a use case and that use case is to be spent. When I hear that, I pretty much short the project. And here's why. Because they don't have 2 layers of depth. I guess the exchanges are the first layer of depth where someone with 1 or 2 or 3 or 5 Bitcoins, they might go to trade. They go to Binance or Bittrex or Kraken or whatever exchanges to their liking to trade that. You can sell a Bitcoin. You're not going to move. You can probably sell 10 or 20. It's not really going to move the market. But you go to a project that's $5 million and you have all these people load up these visas with, ABC coin, and you want to crash that market. How you do it? You don't even need to go to the market. You all go to Amazon and you say, on the count of 3, everyone just spend their coin. Guess what happens? All that hits their book. There's no bid, and it's Bitcoin and Ethereum are, I guess, spendable. I'm guessing Bitcoin Cash and Litecoin, there's probably 10 or 20 projects at the most that can handle that. But I do agree with Jeremy. The whole idea of putting a lot of things not named Bitcoin or Litecoin or Ethereum or a Coinbase coin on a credit card, they don't have 2 layers of bidding, and they're not something that can be spent. And I could go into it in further depth, but I guess you guys probably know where I'm saying that those are not positives. Being able to be spent for a project that's $2 or $3 million being backed on a credit card is pretty much the death of a project. And I can go into it further on another day, but I don't want to hog the mic.
No problem. Thanks, Steve. Appreciate all of the commentary. So I'd like to pivot really quick and hear from Samson Williams. Normally we talk about regulation. It'd be interesting to hear your take on the futures as well, Samson.
Sorry about that. I was on mute. But anyway, hello, beautiful people. Talking about futures contracts, just for as an FYI, FTX exchange is trading Trump futures. So if you're in the US, EU, or UK, or US, EU, and UK, we have to separate it out because now the UK isn't part of the EU. You can't actually participate in these. But if any of these other jurisdictions, you can buy Trump futures. And so they're trading on the FTX exchange. And so the Trump coins are trading there. They all settle, they're smart contracts that will settle out November 3rd. So that's just an interesting bit of hilarity and interestingness. One of the other interesting things that happens talking about Trump is that Steve Mnuchin, he's the Treasury FinCEN secretary. So he was appointed by President Donald Trump not too long ago. And so when Crypto Mom came out with her safe harbor proposal, he came out with a notice to everyone that was just talking about what FinCEN was going to do. And FinCEN stands for the Financial Crimes Enforcement Network. What FinCEN was going to do to monitor suspicious activity. So if you get a chance, you can check out the Treasury's budget for the year 2020. And in there, you'll see how they're allocating more funds for tracking suspicious activity of use of cryptocurrencies. And of course, if you're going to track suspicious activity for cryptocurrencies, you have to track all cryptocurrency activity, which is why if you can get in with chain analysis, I think we mentioned this last week, chain analysis, they went from a $9,000 contract with the FBI. Right now, they have around $10 million with the federal government between the SEC, the FBI, the SEC, the IRS, and some other folks. So that's just like a funny little coincidence about Trump futures on the FTX exchange and one of Trump's appointees at the Treasury. And just for some background, President Donald Trump isn't a big fan of cryptos. If you can go on his Twitter and see how he regards Facebook's LIBOR project and some of the other cryptocurrencies projects. So his appointee, Stephen Mnuchin, is saying that they're going to really look at quote unquote suspicious cryptocurrency activity, and it doesn't matter what the chairman Hester Pierce of the SEC says. So on that note, I just also want to talk a little bit about the 3-year safe harbor that came out of Chairman Hester's proposal recently. So the thing to keep in mind about her safe harbor proposal, she is one of 5 commissioners within the SEC. So she doesn't have the ability to unilaterally change the rules for that. The other thing to keep in mind is that her term expires in June. So if no one else picks that up, it's just going to be dead in the water. So really, this is more like a Hail Mary so that she can solidify her place as crypto mom. Despite that, you'll see a lot of people who are like, oh, we're going to take advantage of this SEC safe harbor, this 3-year safe harbor to launch our token, our coin project. So we did a little analysis. We dug into the weeds of it. We got with our favorite lawyer, Maureen Murat, and we just calculated how much it costs to comply to the safe harbor requirements. So you're going to spend, we're estimating, this is just an estimate, that at a minimum over the 3 years, you're going to spend $700,000 to comply with the safe harbor proposal as it's written now. What that really means is it's still cheaper to go raise money using existing SEC framework from the Jobs Act for crowdfunding versus following the proposed safe harbor proposal, if that were to become law, but we sincerely doubt that it will, because again, SEC Commissioner Hester Pierce, she's out. She retired. Her term expires in June, so just keep that in mind. The old adage, "It costs money to make money," still applies. One of the other things you might have seen trending, it's not necessarily compliance, but it's Forbes released their blockchain 500. I'm sorry, there are 50 blockchain companies. And so basically they took blue chip companies and added blockchain to the list. And so you'll see that there's not a coin or a token amongst this list. You've got BMW, Procter and Gamble, and they're using blockchain as a technology, as a database, particularly for tracking their different assets. So you'll see a big difference between folks, business people who are using blockchain for the purposes of improving their business revenues, and then the currencies, so the cryptocurrencies. And so you'll see a big divergence. And I suspect you'll have the clan cryptocurrency who thinks that blockchain can only be used for cryptocurrencies. And then you'll have the business community who's like, we love blockchain, but we don't do that cryptocurrency shit. So just keep that in mind. That's Forbes 50 Forbes 50 top 50 blockchain companies for 2020. You can just Google that. What else is interesting that's happening? The digital dollar. We've been having a lot of debate. Crypto Dead, the former commissioner for the Commodities and Future Trade Commission, they launched the digital dollar think tank here in Washington, D.C. in January 2020. And so you'll hear all this talk about the digital dollar. And just 2 points about the digital dollar, which we haven't been able to wrap our heads around, or reconcile rather. If you have instant settlement, which I think is great, it's a brilliant idea. With instant settlement, the three big things happen. Number one, there's no fractional reserve banking. So the banks aren't taking your money, taking 100 of your dollars and lending out $3,000. The reason there's no fractional reserve banking, because with instant settlement from digital dollars or stable coins, there are no banks in that equation. And that sounds like a really good thing, if you're like, oh yes, get rid of the banks, get rid of the bankers. But if you don't have fractional reserve banking, you also don't have the 30-year mortgage. And so here in America, that is a novel financial product, the 30-year mortgage. Outside of America, you either buy the house in cash or you just take 10 years to build it. And so there's going to be a lot of conversation. You'll hear a lot of buzz and hype around the digital dollar. People need to really think through that process of what does instantaneous settlement look like in the real world, and how will people get things like loans? And so if you hear the hype, take it with a grain of salt. So yeah, it's going to be very interesting about the digital dollar. When we talk about some of the future things that people will be investing in, we're checking out Google Ngrams, and part of it is some of the research we're looking at for the space economy. So we're at the start of the bubble for the space economy. You'll start to hear more conversation about the space economy. What is the space economy? I have a big bias because we're writing a book entitled Blockchain in the Space Economy. Because once you get off of Earth, what you think of money and currency completely changes once you get up into space. And so when Elon Musk says, hey, we're going to send 1 million people to Mars by 2025, whether or not he gets there by 2050, whether or not he gets there in the next 30 years, there's so much investment that's going to be moving into the space. And so space and the space economy will really be the fifth industrial revolution. We started at fire, went to steam engine, then we got electricity and flight, then the internet, and now that next big bubble that you'll see building is about the space economy and all of the resources that are going into space exploration and discovery. And so I just want to put that out there, to put that on your radar, because again, as you see the hype, you'll just want to think, what are the businesses that are actually doing business in space? And as they come up with ever more exotic ways of financing these businesses, doing some version of tokenized offerings or securitized offerings, what are you, the investor, actually getting? I think that's about it.
That is great. Thanks, Samson. I love the space. We'll just go space squared. The other thing I wanted to point out is you mentioned loans, and I just want to make a note. In my travels and the conferences, I came across cred that gives Bitcoin or loans against your Bitcoin, and they're underwritten by PricewaterhouseCoopers. So there are some things that are moving forward, but I am very interested to understand the mechanics of the global financial engine and mortgages and things like that for fractionalized economies. So that's fascinating. Thanks, Samson. All right, I will turn it over to the team here. Anyone who's on the line, any questions about this week's market performance or any comments for Genius Wednesday?
My only comment, this is Samson, my only comment is that some of the Hagermeyer mask, they make N95 respirator mask. And so they've been crushing it in the last few weeks with the coronavirus. And so again, it's a traditional stock, but it's part of when we're looking at their coronavirus effect on the negative effect. There are also just some really good options out there for companies that are just benefiting from the scarcity of supplies due to the coronavirus. So I'm gonna just throw that out there.
Awesome, thanks.
That is really interesting. Yeah, there's some interesting global macro themes that are happening. There's a lot. I think you touched on a few things, but I mean, there's some crackdowns that are happening in the crypto space as well. I know somebody basically just got indicted on charges. Somebody that was operating a dark web operation that allowed for what's called Bitcoin mixing. Samson, you could probably, I don't know if you know much about it, but I anticipate you probably do. And they're deeming that obviously an illegal activity that's tied to money laundering. So looks like they're cracking down pretty hard on that to prevent the anonymity that is associated with cryptocurrencies. It looks like, they're trying to figure it out, but at the end of the day, until they figure it out, they're going to slap a lot of wrists pretty hard to send a message saying that if you have masked transactions and we can't identify who you are, then we have a big problem with that. So you can anticipate more of those to come. I know there's Monero, there's a lot of different coins out there, but I anticipate this will continue to happen. If they can't track it in some way, you're going to hear about it in the news, which means that was actually probably a really good project that actually had strong, security and anonymity, which is great. But Samson, I don't know if you have any thoughts on that.
I'm not going to comment specifically on that because I do, but I am going to comment on a company called Crypto AG. So it was a Switzerland-based company that they built code-making machines during World War II. Why this is important is because a small company called the CIA bought them. And so along with another company, this is true story, by the way, I'm not making this up. And so for roughly 30 years, they provided encryption software or encryption machines to allies and government agencies. And so they could literally read their messages. So in the mid 1990s, the German company, they withdrew from the agreement, but the CIA continued on with it. And so when we're talking about unmasking who's making what transactions in the cryptocurrency space, I know it sounds very conspiratorial, and I apologize for the conspiratorial soundness of it, but there is a line of thought of which of these companies have the governments invested in heavily, not just chain analysis, so that they may be running an exchange, are providing a marketplace so that people can quote unquote engage in illegal commerce. And I know it's super conspiratorial, but it's happened before where the Central Intelligence Agency has owned companies that provide encryption services. So simply for the fact that they can monitor what's going on. So I think
that's fascinating.
It's called Crypto AG. You guys can Google it. Crypto AG. It's not anything related to cryptocurrencies, but it predates that. It's for encryption of machines. It was actually owned by the CIA. All of this just became public maybe 2 weeks ago. Prior to that, it was classified. So if you're dealing with a organization that is centralized in some component in some manner. It's who actually owns them. So there are a few coins out there that are truly decentralized, that offer privacy, and so as a result, I think there'll be a focus on people like, oh yes, I should use this coin, versus some of the other projects that are centralized, because then it goes to who actually owns it.
That's
Agreed.
fascinating. I would not be surprised if there was some level of entrapment for bad actors. Jeremy, I'll turn it over to you for last thoughts before we wrap up for this Genius Wednesday.
Cool. Well, just thank everybody for joining. I think this is a really great and healthy conversation. I know we didn't even get to touch on a few topics, so maybe next time we can talk about how cryptocurrencies and Bitcoin is, in our opinions, gamifying the financial markets. We're seeing that with the rise in stocks of 80% or more in those like Tesla, and I think somebody had mentioned Sprint as well. So that's a really interesting topic. I know we have partners such as Global Liquidity that have 3D order book data as well and visualizations, and they're looking to gamify that experience so the future of trading can be fully immersive. So there's a lot of interesting things that this technology is pushing. We see it's a future of the Gen Zers and the Gen Xers moving up and starting very young with adopting technology, utilizing cell phones, and they're far more advanced, obviously, than that of their parents. And that is going to become the new norm. So if you look at the future in the next 5-10 years, if that's what they're used to, that is what they're going to be comfortable using. We're already seeing that in terms of polls and things, in terms of their distribution of their assets across multiple asset classes, and more people are moving into digital currencies. And we've just scratched the surface. I think the statistic is less than 1% of the global population has ever used Bitcoin. So we still have a long way to go, still at the ground floor. It's going to be interesting to see how this plays out.
Lovely. Thank you, sir. Well, thank you to everyone. Thank you to all of Team Genius, Steve Kwan, Samson Williams, Jeremy Bourne. Thank you guys for contributing today. We will see you guys again next week. Thanks, everyone.
See you later.